Welcome to the Deep Dive. We're here to cut through the noise of earnings calls and pull out what really matters for investors.
That's right. Today, it's Vertex Pharmaceuticals. We're digging into their first quarter 2025 earnings call.
We'll hit the highlights, the numbers, then get into the nitty-gritty commercial progress, pipeline updates, the outlook.
And we'll wrap up with a potential trade idea, purely speculative, of course.
Always. Okay, let's start with that results snapshot. What are the headline figures?
All right, so for Q1 2025, revenue came in at $2.77 billion. That's up about 3% compared to Q1 last year.
3% overall, but I hear there's a bit more to it geographically.
Yeah, exactly. In the U.S., things look pretty strong. Revenue was up 9% year over year.
Okay, 9%. What drove that?
It's a few things, really. Continued patient demand for their CF drugs, a bit of a boost from higher net pricing, and also the launch of Alyfta. That's their newest CF therapy.
Alyfta, right, and outside the U.S.
That's where things looked a little different. Revenue actually declined by 5% year over year.
A decline. Why was that?
Mostly down to one specific issue and a legal copy product impacting their sales in Russia, apparently.
Ah, okay. So if you take that out.
If you exclude the Russia impact, their international CF revenue actually grew in the low single digits. So underlying demand seems okay elsewhere.
Got it. A localized problem then. What about their newer therapies? Kasgevi?
Genevix.
So Kasgevi, that's the gene therapy for sickle cell and beta thalassemia, brought in $14 million in revenue.
Still early days, but growing.
Definitely. And collaboration revenue was $10 million. Genevix, the new pain drug, only launched mid-March, so its contribution is probably tiny in Q1, baked into that collab number likely.
Right. We'll need to watch those numbers closely going forward. How about profitability, operating income, EPS?
Okay, so non-GAAP operating income was $1.18 billion for the quarter. That's actually down from $1.34 billion last year.
Down. Why the drop?
Primarily higher operating expenses, think increased R&D spending as they push that pipeline forward, plus higher SG&A for the new launches. Also, lower interest income didn't help.
So investing in growth, basically.
Okay.
That seems to be the story. Non-GAAP EPS followed suit, down to $4.46 from $4.76 a year ago.
Okay. And their cash position, how's the balance sheet looking?
Very healthy. They finished the quarter with $11.4 billion in cash and investments.
Solid.
Yeah, and that's after spending about $425 million buying back over 930,000 of their own shares.
Shows confidence. Despite the lower profit numbers, they seem optimistic about the full year. They raised guidance, I saw.
They did. They bumped up the lower end of their 2025 total revenue guidance, now expecting $11.85 billion to $12 billion.
Which means about 8% growth at the midpoint.
Exactly. They're citing continued CF growth, the Kasgevi ramp up, and Genevix starting to contribute more in the second half.
And spending guidance, R&D, SG&A.
That stays the same, $4.9 to $5 billion for the full year. Same for the tax rate guidance, too, around 20.5% to 21.5% non-GAAP.
Okay, so they expect to drive that higher revenue without increasing projected spend. Interesting. Let's dive deeper into the commercial side. We mentioned Alyfta. How's that launch actually going in the U.S.?
Going well, according to them. They're seeing uptake from a few different patient groups.
Like who?
Well, patients new to CFTR modulators, obviously, but also people switching from other modulators, especially Trikafta, and importantly, patients with some of those newly approved rare mutations.
You mentioned it was non-inferior to Trikafta, but improved sweat chloride. What else makes it appealing?
Big things are the once-daily dosing that's convenient, and it covers those 31 extra mutations, expanding the pool of eligible patients.
Right, and internationally, approvals are coming.
Expected in the second half of 25, UK, EU, Canada, Australia, Switzerland are all on the list.
And they're still expanding labels for the older drugs, too.
Yep. Getting approvals for CF Trio and Trikafta for more rare mutations in Europe, the US, Canada, just broadening the reach.
Makes sense. What about the next big thing in CF, that next-gen therapy?
The NG 3.0 program. Based on VX-828, the goal there is pretty ambitious. Get most, maybe all, CF patients to near normal CFTR function.
Wow. When do we see that in patients?
They expect to start a patient study before year end, so moving forward.
Any setbacks in CF?
Well, yeah, there's VX-522. That's an mRNA therapy approach for the roughly 5,000 patients who don't benefit from current modulators. That phase 12 study is temporarily paused.
Paused. Why?
A tolerability issue cropped up. So they're investigating that. A reminder that R&D isn't always smooth sailing.
Indeed. Okay, let's switch gears to Kasgevi, the gene therapy. How's that rollout progressing?
It seems to be picking up steam. They're activating more authorized treatment centers, ATCs. Over 65 are active now globally, getting close to their goal of 75.
And patients actually getting treated.
Yes. They said about 90 patients have started the process, meaning cell collections, and 8 patients have actually received the Kasgevi infusion itself.
So moving from setup to actual treatment delivery, that's key. What about getting it paid for? Reimbursement.
Making good progress there, too. In the U.S., they mentioned headway with commercial payers and Medicaid, partly through a CMMI demo project.
And outside the U.S.?
Yeah, secured reimbursement in England, Wales, Denmark, Austria, Luxembourg, also in the Middle East, Bahrain, Saudi Arabia, UAE.
So access is definitely improving.
Seems like it. And they say interest from patients and doctors is high, so uptake should accelerate as that access broadens.
Okay, now let's talk Genevix, the non-opioid pain drug. Launched mid-March. What's the early read?
Strong early reception is the message. It's widely stocked, already available in about 95% of retail pharmacies. That's pretty quick.
That is fast. Payers getting on board.
Seems so. As of May 1st, they reported 94 million lives with covered access. 42 million of those unrestricted.
That includes?
A big one. A formal deal with a major national PBM covering 22 million commercial lives. And Medicaid coverage is growing, too.
What about hospitals? Getting it on formulary.
That process is underway. P&T committees are reviewing it. Some hospitals have already added it.
Are people actually getting prescriptions?
Yeah, they reported over 20,000 scripts filled by mid-April.
Wow, that's a lot for just a month on the market.
It is, and it's coming from a wide range of doctors for different types of acute pain. They also have patient support programs helping bridge the gap while coverage kicks in, which likely boosts that early volume.
Any sense of how it's being used?
Yeah.
Like duration?
The average prescription duration they've seen so far is about 14 days. Gives you a little insight.
So good momentum across the board commercially. Let's look at the rest of the R&D pipeline. What else is cooking?
A lot, actually. In pain, besides Genevix, there's Custergene, or VX548 for diabetic neuropathy. That's in phase 3, enrollment ongoing.
Another pain candidate.
Yep, VX993, another oral NaV1.8 inhibitor. It's in phase 2 for acute pain after bunion surgery. Results expected later this year. Potential for higher dosing, maybe combinations.
Okay. What about beyond pain? Type 1 diabetes.
Right, Zamesel. That's the VX880 cells plus a device. Pivotal study enrollment should finish this quarter.
And the target population.
It's for about 60,000 people with severe, brittle type 1 diabetes, frequent hypos. If the data is good, could see filings in 2026.
Interesting. I thought there was another device approach.
There was VX264. They've moved that back to the research stage for now. They're still working on ways to protect the cells, though different immunosuppression, maybe gene editing.
Got it. Kidney disease seems like another big focus area for them.
Absolutely. Povetacicept, or POV, it's in phase 3 for IgA nephropathy. Enrollment for an interim look is done. Positive data could mean a filing for accelerated approval in early 2026.
And other kidney targets.
Yeah, they're planning a phase 23 study for POV in membranous nephropathy starting later this year. Then there's Accessiplin for APOL1-mediated kidney disease, AMKD.
AMKD.
Pivotal trial. Ampelitude enrollment for the interim analysis should finish this year. Again, potential for accelerated approval on positive data. Plus, a phase 2 study in AMKD patients with comorbidities is enrolling.
One more kidney program.
Last one is VX407 for ADPKD autosomal dominant polycystic kidney disease. Phase 1 looked okay. Phase 2 proof of concept study starting later this year. Targeting a subset, maybe 10% of ADPKD patients initially.
That is a very broad and deep pipeline. Really reinforces why their R&D spend is up.
Exactly. It spans multiple serious diseases, big bets on future growth drivers.
And tying it back to guidance, the raised revenue, steady spend, pipeline progress, it paints a picture of confidence, doesn't it?
It does. They seem confident in managing growth, funding innovation. They even touched on tariffs, saying the impact should be immaterial for now due to their supply chain diversification. But, they noted that could change.
Right. Always a caveat. Okay, let's shift to our This Is Not Financial Advice segment. Thinking about everything Vertex is doing, especially the Genevix launch. What's an outrageous but plausible trade idea?
Okay, so here's a thought, purely speculative. Given the really strong early uptake for Genevix, the fast payer coverage, the non-opioid angle,
Yeah.
maybe consider looking at a long position in a major pharmacy benefit manager, a PBM, particularly one with significant exposure to commercial health plans.
A PBM.
Well, the logic, kind of winding, is this. If a novel, effective non-opioid like Genevix gains significant traction for acute pain, it could represent a shift. PBMs are central to managing drug costs and formularies.
Okay.
A PBM that positions itself well, maybe gets favorable terms for drugs like Genevix, and demonstrates it can help manage the transition away from opioids in acute care settings. Well, that could potentially boost their value proposition to employers and health plans. Lower overall costs, better outcomes, maybe.
So the idea is that the success of Genevix could indirectly benefit certain PBMs who manage its access and cost effectively.
Kind of. It highlights a potential trend managing acute pain differently, and PBMs sit right in the middle of that financially. It's definitely an indirect play, and PBMs are complex businesses influenced by tons of factors.
Hence the outrageous but plausible.
Exactly. It's connecting dots that might not be obvious. But the Genevix success story could create ripple effects, maybe benefiting players like PBMs in unexpected ways.
Okay, an interesting angle, and of course the usual disclaimer applies.
Absolutely. This is not financial advice, just a thought exercise. Do your own thorough research. Talk to a professional before making any investment decisions.
Definitely. Well, that wraps up our deep dive into the Vertex Pharmaceuticals Q1 2025 earnings call. We hit the financials, the CF franchise updates, the progress with Kasgevi, and the very promising start for Genevix, plus that extensive pipeline.
Yeah, a lot going on there, lots to track.
Hopefully this gave you some valuable insights into where Vertex stands and where it might be heading. What stood out most to you listening today? What are you going to keep an eye on?
Definitely encourage you to keep digging and thinking critically.
Thanks for tuning in to the deep dive. Join us next time for another exploration.